Alrighty, folks, there is a growing trend in the real estate industry that I think has just started. Like we are just drip, drip, drip. This is going to turn into a tsunami, in my opinion. And that is fractional real estate ownership. I've had the joy of speaking with the folks at Real Bricks over the last couple of weeks, seeing what they're doing. But you know what? We got somebody in our community that only does fractional real estate investing. So we should pick his brain, ask some questions, and see who's who in the zoo. Joseph, thank you for being here, man.
Thanks for having me. I do just really want to quickly clarify. I have been a real life real estate investor for 20 plus years.
Yep.
I only talk about fractional real estate investing on my channel because that's what I think is most interesting right now.
Sure.
I've over the last year plus, I've been heavily into it. I took a relatively small portion of my net worth and said I'm going to experiment with everything in this space. But so, to say that I only do it is a little unfair, but it's definitely what I think is like you said, I think it's the future. I think there's going to be a lot of it. I think it's going to be a growing industry. And so it's where I decided to focus my time.
I appreciate that. And yeah, I didn't mean to diminish your 20 years of practical hands-on experience, but in my community, at least in my world, you're my go-to guy for fractional real estate investing.
I appreciate that.
Let's talk about what it is first, right? Because I really do think this is like just beginning. I think we're not even in the first inning. Frankly, I think there are going to be hundreds of players in this space, and I don't know what there are today, dozens. And it's going to be way more and more of us own real estate, I think. So why don't you break down what it is and why is it so exciting?
Sure. So essentially what people are doing is they're taking a single property, usually putting it in some sort of entity, typically an LLC. Sometimes it's a DAO LLC, and then selling individual shares in that entity. Essentially, like it's very for some of the platforms, it is exactly like buying stock in a company that owns one property. In others, it's a little bit different. It's more like buying direct ownership in a partnership that owns the property. But in any case, and it does vary quite a bit from one platform to the next. But it's just like you're getting a piece of ownership in that property, and that usually entails you get some portion of any rents or profits, some portion of the equity as it grows when you eventually sell it. And depending on the platform, sometimes some of the tax benefits of owning real estate, oftentimes not.
Often, yeah. As of right now, I'm hearing a lot more, oftentimes not. This is why I think the solution evolves over time. Because again, when you think about owning rental properties, kind of the one rental at a time way, it's not only cash flow appreciation, but also the tax benefits, right? So it'll be interesting to see how this evolves. Because again, I think we're really early, and I got to imagine we're so early. They're still trying to work with the IRS and all the other components to have it be kind of the full benefits. We're that early in this cycle, I think.
Absolutely. And it very much depends on how the platform has addressed the regulatory environment. Whether, some of these are actually REITs. It's set up as a REIT, but it's a single asset REIT. Some of them are truly partnerships, and then I'm getting a K1 from them. And then it really looks like I own the real estate and I'm getting the depreciation, and that benefit. And there's all sorts of people sort of experimenting with stuff that, quite frankly, is probably not actually compliant with anything that the tax laws or SEC stuff either.
Yeah, when I started poking around this, the guys at Real Bricks, they reached out to me and basically started asking me questions and opinions, much like Himlane did a decade ago. And it's been fun to kind of talk to those guys and make suggestions like, how would you, like, as an owner, how do you like to see this and all those things. But when I think about my research into fractional, a couple of things are interesting. One is it's a way for, you don't have to be a heavy hitter, right?
Right.
You can get involved for $100 in a lot of cases and be a small owner in an asset. Is that true in most cases?
Yeah, absolutely. I mean, and for some sites, it's as little as $10 to get started. So it is.
Wow, you can $10. Jeez.
Yeah, okay. So it can be very small ownership. I think it's a great tool for someone who's just getting started. I think the biggest hurdle. I know you deal with real estate investors every day. Going from 0 to 1 is what stops probably 90+% of people. And so if
For
you can get
sure.
them to go from 0 to 0.1, and slowly take those steps. I mean, that's what attracted me to the space initially.
Mm.
Because in real life, my team, we only work with real estate investors. And I just saw all these people who talked to me about investing and just never got there. And I
Yeah.
think it's a way some of those people will still look at fractional and come up with reasons not to buy. There's one
Sure.
guy that I've talked to for years, never bought real estate in real life. And now he's talked to me for the last year about fractional and still hasn't. But for everybody else, I think it's a good step. You can make these little steps. Now, obviously, if you're only investing 50 or $100 or whatever it is, you're only going to get a return on that. But I
Of
think
course. Yeah.
it's a way to get started. It's also a way to learn a lot about real estate investing, because you can own pieces of literally hundreds of properties without having a huge amount of money
Mhm.
invested, and see what's going on in different markets, see how different business plans work, all sorts of different stuff that I've learned.
Mm.
Because up until I started in fractional real estate investing, I had really invested in New Jersey and Texas, and that's it.
Okay.
Now I've invested in 14 states as far as
Wow.
equity in properties, and then probably double that if you include fractional debt on properties.
Mm. Oh, that's interesting because not so I've only looked at this from fractional equity positions, but there's actually a fractional debt market. Tell me what that looks like.
So the one main one is that I invest in is ground floor. There's a couple other smaller ones, but ground
Okay.
floor is they are essentially a hard money lender,
Okay.
and they're making their money off of the points that get charged, and then
Okay.
then they sell off pieces of the loan, and so they're very short term loans. Typically, 18 months is about the longest they'll go.
All right.
And you're getting, my average return on there is a little over 11%, and so I'm
Yeah, I was
just
gonna
getting,
think double digits. Yeah. Okay.
yeah, it's really nice. I've only been on there again a little over a year. I have heard feedback from people that have held longer that you start to accumulate these more non-paying loans in your portfolio. Hasn't happened to me yet. I've had some that got extended, but none that have
Sure.
defaulted yet.
Okay.
I think I had 167
Damn.
payoffs so far, so quite a few. But I mean, that's a site that you can do $10 at a time if you want to. So I don't haven't
Okay.
had a ton of money in that platform, but a
Yeah.
lot of a really broad experience on there, and that's
Sure.
that's
Yeah.
one of the things that I
167.
like a lot.
That's crazy. So again, I do think fractional investing, whether it's equity or now debt, I didn't even think of that, is only going to grow from here. And again, I think you're right. One of the ways you can get started, right, that whole 0 to 1, maybe we now do 0 to 0.1, is just learning the business, right? And what I've
Right,
seen in my research is typically speaking, you're getting kind of quarterly reports. And this is really where I focused with the Real Bricks team on kind of trying to dress that up. Because again, if you're going to be an owner of something, you actually got to get feel like you're an owner, right? And understand
right,
where the money's going.
right.
And not a lot of, at least early on, it was just like, hey, here's your yield and here's a check. But I don't give a shit about the check. I want to know how I got to the check, right? Tie the numbers out for me so I can
Yes.
ask questions and learn all these details, which was missing and now being added. So you typically get quarterly or is it monthly reports?
So this is really interesting, right? I think I get monthly reports on the platforms I like the most.
Hmm.
I know you've mentioned a little bit. There's some that are SEC registered and some that are not, and it
Yeah.
depends. I find that the all of the ones that are SEC registered almost all follow what I call the arrived homes model. That's probably the biggest player in that space that's
Mm.
doing it exactly that way. And Real Bricks is one that's basically copied their model. I think they even use the same broker dealer as Arrive. So it's a very it's that similar model, and almost all of them are only giving us quarterly reports. And I
Hmm.
think it's because of it's cumbersome to file the
Oh, the
info with the
SEC stuff.
SEC,
Yeah.
and
Hmm.
you can't. So it's counterintuitive, but you tend to get less info from those ones than the ones that are doing it otherwise, right? And so
Yeah.
I far
That makes
prefer
sense.
the monthly. I'd much prefer getting all the details, like what was the insurance, what were the
Hmm.
maintenance,
Of
everything.
course.
Like
Oh,
I
yeah.
like to see all of that.
Yeah. It's like a
And
checkbook. Yeah.
so
I understand.
that's
Yeah.
been one of the challenges with the ones that are using a registered security versus going, using some other safe harbor that they're operating in.
So tell me, because that's, again, everybody's different. That's where I kind of draw the line, right? I've seen a lot of investments over my almost 3 decades. Some are SEC certified and cumbersome, and others aren't. And, there's a difference, right? There's an overhead, there's a cost, obviously,
Right.
to being SEC regulated. But to me, that's a level of, that's kind of a red line for me. It appears it's not a red line for you. So tell me about the folks that aren't SEC registered. What are they doing to make you, quote unquote, feel better?
So, well, one, I mean, I'm always just pushing for a lot of transparency. The more information they'll share with me. But one of the things I want to make sure is clear
Mhm.
is registering your security with the SEC. Like, if you haven't registered it, doesn't mean you're unregulated by the SEC, right? You still have to comply with their regulations, whether or not you register, right? Registering just makes it so you can make it a public offering. And so a lot
Mhm.
of the platforms, and I think I told you last time I was on this channel, I'm not an
Mhm.
attorney anymore. And so this is just general information about this. And I could certainly be wrong about some of the securities laws exactly. So I always get a little nervous when I talk about that stuff,
Fair
especially
enough.
with that.
Fair enough.
But just because you don't, the registering is what gives you the right to offer it publicly, your security
Publicly, right.
publicly
Mhm.
in certain formats. There are and have historically been, sometimes going back over 100 years, these safe harbors that you can operate in to offer a security, um, because they
Mm.
are still securities typically.
Okay.
Although some of the
Can you give me
platforms
one example of a safe harbor? Because this is there.
so
I'm
one
not
is
even swimming in
what's
waters.
called the
Yeah.
investment club safe harbor. And so if we
Yeah, I've
get
heard of
together
that.
as a club, and and that's how my favorite platform, which is mogul.club,
Mhm.
they operate, they're using the investment club safe harbor, as well as um they have some they have some other things that they've done in the way that they've set up their company, the individual
Mhm.
ownership companies,
Mm.
that give owners, uh we have some rights to make some decisions. We're not just coming along and doing 100% of
You're not
what they
just a
said.
yeah. Okay, got it.
And
Yeah, I
so
like that.
that also clouds the, is this a security or is it not, right? Because in a
Mm.
security, I'm a truly passive investor.
Correct.
Some of the platforms really use that, and so they're saying, no, we're not a security at all. This
Mm.
is a multi-member LLC where we all have ownership rights and all have authority.
Mm.
Those tend to get kind of messy. Yeah, I
I
think
was
it
just
is.
gonna say that feels like a future problem.
Yes. So I'm heavily invested, or not. So I took $100,000. I said, I'm going to just spread this out over however
Yeah.
many platforms. And so one of the platforms that I started early with was Lofty. They're using that strategy where they're saying, you just get to vote on everything.
Mm.
It has turned out to be an incredible mess.
Mm.
But I'm making better returns on that platform than anywhere else. But I
Cool.
very much don't recommend it, because unless you are willing to be in the weeds every day,
Yeah, and again,
really
this is you got to
affect those
remember why you're
decisions.
doing this, right?
Right,
When you go back
exactly.
to fractional investing, it's supposed to be easy and passive and straightforward. It's not supposed to give you gray hairs.
Yes, and so I've really scaled back. I had been talking about them all the time, but I don't think it's a great fit for most of my audience, because the way you make great returns on there is really just being very active
Mm.
and affecting the outcome of your properties more
Got it.
so than
That makes
with a
sense.
lot of the other platforms. Um, but yeah, so those are the two main ways that I see. But you
Mm.
also see, just like when I'm sure you get offers to invest in syndications. Maybe you've invested in those yourself. They'll
Almost
usually use
every day.
a private
Almost every day.
placement memorandum. Which
Yep.
is, again, it's not a public security. They don't have to register it as long as they meet certain rules. Maybe they're
Well,
only.
so let me ask you about that. So again, I'm what that's called an accredited investor,
Mhm.
and that means I meet some minimum bar, right?
Right,
And again, an accredited investor, theoretically, when it was created, meant you could lose the money and it wouldn't change your life.
right.
Why it was created. Not a lot of, at least the ones that I looked at, but I didn't look at very many. That's not where they're playing. These guys aren't playing at the accredited investor. They're playing below that.
Mostly that's accurate. Some of them are using some. So some of those ones that are set up for non-accredited investors, you can have up to 35 non-accredited, and then everyone else has to be accredited. Well, if I'm
Oh,
raising
that's right.
capital
There's a
for
limit.
just a
Yeah.
single home, I might only have 35 people that are investing in it. So some of them are using that
Oh,
safe
that's
harbor
kind
as
of
well.
tricky, but
You
okay.
know, and
I gotcha.
they'll use, so there's some that are using, you know, okay, we've got all these retail investors, and then okay, our fund's going to make up the difference, and so now we have
Yeah. Yeah. We'll be the
you and
final.
I working
We'll make
fine.
up the delta. I got it. Okay.
Right. So that's, yeah, that's another one that they're using. I
Okay.
think, you know, the reason that most of those platforms that are not going the registration route tend to be my favorite so far is that there's so much overhead.
Mm-hmm.
You know,
It
if you're buying,
eats into the money. Yeah.
yeah, it's really hard if you dig into the numbers on most of those platforms. Like, you know,
Mm-hmm.
and I think I posted a video about Real Bricks after you did that.
Mm-hmm.
Your one of your interviews. Try,
Yep.
you know, kind of, I'd really like them to break down their numbers because I have a hard time getting to the numbers that they get to.
Right.
Um,
Okay. Makes
and
sense.
I think it's so, and I, you know, the one that they're very similar to Arrived that has 4 or 5 years of history
Mm-hmm.
where I, you know, can go back and see how they're doing. The way, you know, they keep paying out their yields, but a lot of it is they take a loan from Arrived in their bad months, and so some of them have accumulated an enormous
Wow.
amount of debt to it in order to continue to pay out this dividend, and at some point in time that breaks. So
Well,
some
the
of
whole
them are,
so again, I'm not I've never I'm not a lawyer, never pretended to be one, but again, I've been in this game long enough. Why isn't that a Ponzi scheme?
well, that's a good question. Well, because
It's
I guess,
debt,
I
not
mean, they're,
equity.
what's that?
Is it as simple as it's debt, not equity? Because again, Ponzi scheme, you're taking new money and paying old money. This is not. This
Right.
is actually debt that's encumbered, probably.
Right, and it's debt, like, it's debt that the entity, you know, the Arrived company is lending it. It's not new investors
Right. That's
lending it,
probably
right?
the wrinkle.
Which
Yeah, it's
which is
probably the
why I think
wrinkle,
it's probably not.
and it's probably pledged against the asset. It would have to be, right? It'd
I
have to
I
be.
think that it is. I mean, you know, a lot of times again, the SEC, like, disclosure is just like, this is our new debt, and then it's like, and it's just listed as debt from
Yeah.
associate,
This
or,
this
you know,
is this is where
associated
this
entity.
thing breaks down for me in my mind, right? Because
Right,
again, as part of being an owner, I hate to tell you folks, you're going to have bad months and bad quarters. You're going to lose
right,
money, right? Shit breaks. People get evicted. Shit breaks. And frankly, I don't, I would hate my, I don't know, operator, call him operator, to get a debt so they can pay me my 6%, but that debt then goes against the asset. So when that asset's finally sold, I got to pay back the debt. So I don't no longer own 100%, or we collectively don't own 100% of this asset. Because that's the wrinkle that I liked in the beginning, right? They're buying these things for cash, and then they're putting equity, aka shares, a finite amount of shares, then can be traded on an open market eventually. That all makes perfect sense to me.
right,
But I don't want my operator, and I don't know what else to call him, to pay me a yield in a bad month or a bad quarter. If
right.
it's if it's
Completely agree.
negative, it's negative. I mean, I that drives me crazy if people would do that.
Yeah, no, I was really surprised the first time I saw it, and I've seen it on, and, you know, just, I know I mentioned Real Bricks is similar to them. I haven't seen it on theirs yet. I mean, they're one of the newer
They're telling
players.
me they're
They
telling
don't
me
have
it's
the
not,
whole,
because that's where I've been beating them up, right? They came to me and
yeah,
asked me, how would you like to see a report, right?
right,
You own a lot of stuff. What do you? And that's where I've been spending all my time with them is, guys, I got to be able to look at this. I'm an accountant and I don't understand some of these reports. I mean, if I can't get it, what the hell, right?
right,
Simplify, 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 straightforward. I had never even thought about them taking a loan. And now, again, we're not saying they do because we don't know,
right,
but I'll
right.
be asking them, like, what happens in a bad month? Because that's not cool. I just can't imagine. That just feels wrong to me. Yeah. I don't know. Sorry. Digress. You still there, Joseph? Did I lose you?
I can hear you now.
Okay, Joseph.
There we go.
I was just whining about how icky that feels to have debt make up for a negative month. Sorry.
Right, and that's what, you know. So, again, my favorite platforms when they're doing this, they're raising huge reserves, um, like much larger reserves than what I would normally have for a property, because they want to
Sure.
make sure,
They get through the
uh,
seasons of bad.
yeah,
Yep.
we can make it through those downturns. But some of them I've seen payout yields out of reserves, and I don't want to see that either, right?
I do not want to see that.
That reserve is just a negative month. You're covering,
Yeah.
whatever
Just tell
expenses
me what
are.
happened. Yeah, I'm
Right,
an owner. I know bad shit happens. Just tell me
right.
what. Oh, we had an eviction in $11,000 in repairs. Right. Well, take the 11,000 out of reserves and don't pay me anything for 2 months or 2 quarters or whatever
Yeah,
until that's built back up.
absolutely. I mean, that's what I like to see the most. And then, you mentioned they're buying these all cash. I actually prefer the platforms that are using some debt with their acquisition
Really?
because, again, it's
Okay.
looking the most like me buying real estate in real life.
Mm.
Um,
Okay.
only when it is conservative. I mean, sometimes I've seen these where they're putting what I think is just a stupid amount of debt on it.
Yeah.
But 70 or 75% where we have a debt coverage ratio of 1.25 or better, I'm okay with
Yeah.
that as long as we have a fat reserve. And that's
No,
what,
yeah. I get that. I'm not okay with that. Again, that different investors
you
are
don't,
different. Yeah. It's
right?
just I might go 50%. I mean, when you think about it, but here's the deal. I would want the yield to be greater than the cost of capital. And today
Oh,
that's hard,
absolutely. 100%
right?
I agree with that.
Yeah, the yield's got to you can't have a negative carry, right? You
Right.
can't be paying 8%, but it earns 6, right?
I,
That's
I- I'm
yeah.
100% in agreement with that. So
Yeah.
again, just to, I mentioned Mogul is the one that I like the most. I've talked
Okay.
about them quite a bit on my channel. Obviously, I'm only a year in with them. Things could go wrong.
Yeah.
But their unlevered yields are typically in the 9 to 10%, and they're
Now, have you
paying.
actually seen that? Because again, it's one thing to put it on paper and it's
Yes, yeah.
okay.
I bought my first property with them in December of last year.
Cool. Oh wow,
Um,
yeah.
and I have 11 that are paying out so far. I have interest in 4 more that haven't even closed yet, and so I
Nice.
don't have those.
Okay.
But on average, yes, some of them are much higher, but they're using the pad split model, co-living, and they're using short-term rentals. Um,
Wow. You're laddering this up. So they're going co-living and okay.
and
I
and
get
they're
so I
only
know why they're
buying.
double digits. That's for sure. Yeah. Okay.
Right. And so they're only buying properties that have been existing, have typically they have 12 months or more operating in the model that they're buying it at. So they're
Oh,
buying
that's
turnkey
interesting. So they're
properties.
not buying a 4,000 square foot house and making it co-living. They're buying existing co-living.
Right.
Interesting. Okay, that's a little
Yeah,
wrinkle. Okay.
I'd be pretty scared if they were buying vacant homes,
Yes.
filling them buying
Yeah, me
based on
too.
their projections. So yeah, using those two models is how they're getting to higher
Of
yields, and
course.
then because they have the higher yields, then they can carry their 6.75% debt, which
Of
is
course.
about what they're paying on most of theirs right now.
Yeah, I would. Yeah, that's really interesting to me because you take two growing trends and smash them together.
Right.
Fractional real estate investing, co-living, smashed together. That's interesting. I mean, if that's where you want to go. That's because again, that's going to be higher return than just boring, year leases, long term, one rental at a time. That's obvious. Okay, that makes sense. So which one was that again? What did you say, Mowgli?
It's mogul.club.
Oh, Mogul. Sorry.
I actually have interacted with those guys quite a bit. I bet if you wanted to, I could put you in touch with
Yeah,
them, and they could.
make an intro. Yeah.
They're
I mean,
two relatively young guys from my perspective. They came from Goldman Sachs private equity,
hmm.
buying these types of properties for a Goldman Sachs fund, and we're like, hey, we're going to just do
Yeah,
this
let's
on
do it on
our
our
own.
own. Yeah,
So I
good
don't
for
know.
them.
I like them a lot. Who knows? It could turn out to fall apart just like anything else. But
Of course.
they created this. It's a really great tool as far as their analysis tool. You can actually
Uh-huh.
use it for other properties, and I do that sometimes.
Hmm.
But they spit it out for every property that they have, and they make adjustments. But that's what the thing I really like about them is on the front end. They really spell out all their assumptions on the property, all the expenses. I can play with their tool and say, okay, what if they're wrong about these things, and it will show
That's
me
cool.
where it goes. Um, so their commitment to that sort of transparency has been much higher than a lot of them that I've seen,
Cool.
which
Okay.
is why, and they are one that's operating in that, the
Club. Yeah.
investment club safe harbor.
Right.
I was uncomfortable with it at first. I talked to them a decent amount about it. I asked a lot of questions. I did some research on my own.
Mm,
I mean, if it were, they were two people with a lot to lose when they formed this company, right? They
for
didn't
sure.
go into this lightly. They said they spent like over a year dealing with their attorneys trying to set it up in a way that they believed, they could operate and
Mhm.
be compliant, right? Because again, it's not that they're unregulated; it's that they're trying to fit into the regulations and sort of a
Yeah,
different way.
they found again, it's called a safe harbor, and they're trying to do everything they can to fit that, right? They don't want to
Right.
cross the line. Yeah. Okay. I like it. Makes
I
sense.
always get nervous because I do think I'm a little too much of a fanboy of theirs because they consistently put out properties that I like. I say that I still only buy like every other property that they list. They still put
Mm,
ones out that I'm like, I'm going to pass on this one for one reason or another.
yeah.
Um, but it is, yeah. I mean, it's one of the few platforms that they're really real estate guys that are
Mm.
operating it versus a lot of these platforms are tech guys. They maybe went and hired a real estate guy to sort of be the face of their
Oh, that's
company,
true.
or
I've seen some of that. Yeah. Yeah. Okay.
but it is when you ask the people who you're dealing with every day real estate type questions, you don't get answers that make sense, and
Yeah.
that often
Amen.
worries me.
Yeah, I got it. So again, there's so much stuff going on. If you were to recommend kind of like, let's say we've whetted people's appetite on the topic of fractional real estate investing,
Hmm.
what would be the one, two, three sources that you would send them to? Obviously, your YouTube channel's got all kinds of stuff, but where else are we sending them?
Yeah, it's tough. I mean, there are not a lot of people talking about it right now other than the platforms themselves. And so that's why I'm so excited about the space. There's not another there's not even another YouTube channel that I can point to and say this guy
Mm,
talks about fractional real estate all the time. Like if you
yep.
search fractional real estate investing and you scroll past the first 20, then it's basically just me after that. I
Yeah.
mean, because
And
I
what's the
put out
channel name? Sorry, I forgot.
it's just my name, Joseph Cacioppolia, but literally just search fractional real estate investing and scroll, and you'll
There you go.
like. It's so strange to say because I have such a tiny channel, but
Good for
nobody,
you.
there's the other people that talk about it are people like you that have hundreds of regular real
Yeah.
estate and investing videos, and then you put out a couple about this, and that's really all I've seen out there. I did also set up a Discord community
Oh,
where there's just a whole bunch of us talking about it, and we've got 130 members, and
damn.
it's really active. I mean, because
Nice.
there's not a good place that this is being discussed right now. So
Yeah.
one of the
So
things, and oh,
go
go
ahead.
ahead.
I was going
I
to
was
say,
going to
let me
say,
break this down. This is how I kind of break down this growing market. And again, my opinion, feel free to disagree. As a net new investor, you have to figure out, first off, who you're comfortable with, right? So again,
mhm,
some are fully registered, some use these safe harbors. I think that's a decision point everybody has.
right,
Then below that, so again, you can pick where you are on that decision tree, and it'll send you down one path or another. The next path is what assets are they buying?
right,
I.e., I think you said it was Mogul is doing rent by room, right? Co
hmm,
living. Again, if you like that, makes sense. If you don't like that, then again, somewhere else.
right,
Uh, Areas of the country, I think one of the things this does offer is diversification.
right.
Like if you're like myself, heavily focused in California, right? It probably behooves you to throw some money, which I have. I've got money on Real Bricks, just to just to put my money where my mouth is as I try to help
Mhm.
them do new things. And I think there's again, it's so early.
Right.
It's so early. I mean, in a year, it'll look night and day different. In 5 years, I mean, here's a guess for you: 5 years from now, this space will be 100x what it is today. What do you think?
Oh, I completely agree. I mean,
Oh yeah,
it's
coming.
so new, and there's just so many reasons for it. And if we can get past filter out all the grifters in the space, which is
It's
my
coming.
goal.
Yeah. Yes.
And then yeah, I mean, there's just so much benefit for the individual investors, especially the people. Two, I think it helps two people. One, the people just getting started, and two, the people towards the end of their career that really just want
Yes.
a truly passive,
Amen.
experience.
Yeah.
Maybe in the middle for a little bit of like cash flow, like, oh, I need to park my money somewhere for a little bit, but
Yeah. Better than a
I
money
think on
market,
the
maybe.
ends is where
Yeah.
you see a lot of demand.
Yeah. So let me kind of the reason I love to talk to you is because I learn new things. One of the things I will admit that was a red flag, and we don't need to name a platform. I don't want you to name a platform, but one of the
Okay.
things that if I was looking at these and I saw somebody take out debt to pay a dividend on a bad month,
Yeah.
that's a no go for me. Yeah, I mean that
Right.
would just be I'm not playing it again. Don't name anybody because I don't want any hate, but that would be a big red line for me.
Hmm. Yeah,
Yeah.
absolutely.
Yeah. Yeah. Again, Joseph, this is amazing. I know we're going to talk again because this space is quickly evolving. So do me a favor. Anytime you see something cool, new, different, exciting, risky, let me know. I'd love to make
Absolutely.
sure I can push this space because, again, I think it will be 100x in the next 5 years. And you're out on the forefront. So thank you for doing that. One more time, what's the YouTube channel?
Joseph Cachapolia. So just
Simple,
search
simple.
fractional real estate online.
There you go. Thank you, buddy.
Thanks a lot.
Uh-huh.